Good morning, everyone. Trust everybody is safe and healthy. Happy Wednesday. Three things that you can look to hear in today's episode. S&P 500 pushing beyond its 200-day moving average. Comments on the US-China trade deal. And you'll be amazed to hear about the forward price to earnings ratio of the S&P 500. The S&P 500 ended up 1.2% higher at a 11-week high, but gave back almost half of its gains in the last 30 minutes of trading. The yield on the 10-year Treasury ticked up 3 basis points to 0.69. The dollar was weak against every G10 currency. Oil gained and gold slipped. Asian equity futures are pointing to a mixed open. A key development in the broad financial market is the S&P 500 pushing beyond its 200-day moving average, which is an important measure of momentum. With the benchmark back above the 3,000 point threshold for the first time since early March. The Nasdaq 100 closed a touch lower as large technology companies faltered. Another big market leader of late, which is healthcare, including the biotechs, also slipped as a rotation towards the recent laggards was highlighted by gains among smaller companies and banks. The market rebound has pushed the S&P 500's forward-looking price-to-earnings ratio to 23.36, which is the highest level since 2002. But corporate profits are expected to remain under pressure until next year as sales stumble and expenses rise. Novavax started its first human study, which follows last week's positive reports from Moderna. Merck also joined the race with plans to start clinical trials this year. While many experts say that the vaccine is still 12 months away, a progress towards a medical solution is enough to bolster investor sentiment. The US-China trade deal is on for now. This is according to Trump's economic advisor Larry Kudlow. He added, saying that we will see if Chinese implement that deal. Robert Lighthizer, Steve Mnuchin and Vice Premier Leo He had a constructive meeting recently. This is according to Kudlow. Separately, Trump and Mike Pompeo discussed restricting students and researchers in China from studying in the US. Now, all of this is as reported by Fox News. Singapore rolled out a further $23 billion of stimulus with focus on support for jobs and projected a record budget deficit of 15.4% of GDP. This package, the fourth such package, extends and boosts wage support, waives a levy on foreign workers. The government's additional spending is now equivalent to almost 20% of annual economic output, which is in the same league as what we have seen from Germany and Japan. Moving on to equities, Reliance is readying its Geo platform for an overseas IPO. A listing of digital and wireless business, which has attracted more than 10 billion of investment in a month, could happen in about 12 to 24 months. Is what is being reported. The company also hasn't picked an exchange as of now. SoftBank is exploring a sale of minority stake in OSI Soft that could be worth about 1.5 billion. Siemens plans to cede majority ownership of its energy unit with a spin-off scheduled for September. France, in the meantime, pledged 8 billion euros to prop up its auto industry. So the 8 billion euros also includes state bank loans such as 5 billion euros slated for Renault. On a related note, Intesa approved about 6.3 billion euro credit facility for Fiat Chrysler. On the rate side, Wall Street banks are back in the bond market, taking advantage of low borrowing costs. Lenders including Citi and Wells Fargo announced new offerings, each returning to the market for at least their fifth dollar bond sale this year. Both have also borrowed in other currencies such as euros and sterlings. The 6 major US banks have been the most active bond issuers this year. Germany's 5 billion euro sale of 2-year bonds received 3.3 times as many bids, which is the strongest demand that has been seen since 2007. ECB won a significantly higher debt, weaker bank profitability, and market fragility will continue to cast a shadow over the region. This is according to the bank's financial stability report, said that the probability of corporate defaults and falling real estate prices has also increased. Moving on to Forex, the improvement in risk appetite drove investors out of the US dollar into major currencies. US data was actually good. The actual data print on the new home sales turned positive and consumer confidence also improved. Economists were expecting new home sales to fall at a faster pace in April, dropping about negative 23%, but instead sales rose 0.6%, which is a sign that lower interest rates provided the housing market with much needed support. The New Zealand dollar and Australian dollars were the best performers, with New Zealand dollars leading the gains. The Aussie dollar rallied even though tensions between China and Australia continue to grow, with China's Commerce Minister confirming that 80% tariff on Australian barley is tied to Canberra's trade investigations. Despite talk of more stimulus from the central bank, Euro-US headed back towards 1.10. ECB member Velroy described the central bank's pandemic emergency purchase program as a masterpiece and said will probably need to go even further. There is also talk that central bank would continue to buy bonds without the participation of Bundesbank. That is your market update. Stay safe and healthy, everyone. Thank you.